Aloha, YouTube investors. How is everybody doing today? My name is David Yansen. Welcome to my channel. Today, Netflix released their earnings for 2020, quarter 4 2020. So, going to do a kind of a stock analysis, a summary stock analysis of Netflix, look at how they did for 2020, look at their memberships, their subscriptions, and the money as well too, revenue and income, things like that. But first, let's look at the stock price. As you can see right here, this is from Yahoo Finance. $501 is where the stock ended when the U.S. stock market closed at 4 p.m. Eastern Time today, which is January 19th. In after hours, it went all the way up over 12% to $564. That is an amazing jump. I don't know if it jumped like that because the numbers were so good for this last quarter, or if it's because Netflix said they might do share buybacks for the stock, which basically inflates the price of the stock. So what some people might have thought is, okay, they're going to do a share buyback program, or they might do a share buyback program. So why don't I just buy this now? Because they're going to buy back some shares. The stock price is going to go up. So I might, make not double, but, I might make a quarter of what I invested in if I get it right now. I'm not sure, because the last quarter when they announced their earnings, the stock actually went down. And that happened kind of all through 2020 for a lot of companies. They had really, really good numbers when they announced their earnings report, and the stock went down. But let's look at, let's highlight some other things really, really quick here. Of course, Netflix doesn't pay a dividend. They are a tech growth company. They are in the streaming wars. They're part of the FANG. Facebook, Amazon, Apple, Netflix, Google make up the FANG. Some people put plus Microsoft plus Tesla on the end of that as well too. I personally don't own Netflix, but at the end of the video I'll give you my opinion on whether I plan on getting in on Netflix and what my thinking would be behind on if I decided to start investing in on Netflix. Of course, it will probably be fractional shares because I don't have a lot of money to invest. And if you've seen my portfolio, the three main ones that I use, M1 Finance, Fidelity, and Robinhood, and I have strategies for each of those three. I started originally with Acorns and Stash in May of 2019, and then eventually I moved to Fidelity, M1 Finance, and Robinhood. So with my strategy, the way that I have my strategy set up with those three portfolios, I would probably put it into my Robinhood. And so I only own two FANG companies, which would be Facebook and Amazon. Facebook, I really just kind of wanted to turn around. Once it gets to $300, I'll sell out of it and buy into something else. It did get to $300, but I didn't sell it. I thought I'm just going to hold on to it a little bit longer, wait until I find something else that I really want to, another growth company that I really want to get into, and then I'll sell and put it into that. But then once it got to that $300, it never got back to that $300. So I'm probably going to have to wait for this next earnings report for Facebook to see how they do, to see if Facebook stock gets back to that again. So at the end of the video, I'll tell you more of my strategy and what I'm thinking as far as Netflix is concerned. But some other numbers that were just amazing for them. 8.5 million subs were added in the quarter from October to December. The estimate was 6 million, so they blew that number out of the water. They also added in this is just a comparison of 2019. In 2019, the company added 27 million subscribers. In 2020, in the first 9 months of 2020, the stock added 28 million subscribers. So Netflix had an amazing year, and of course the stay-at-home economy really helped them out a lot, because as soon as people had to work from home and maybe the kids had to take classes from home, go to school from home, maybe one parent had to quit their job to stay at home if the other one wasn't, if their other spouse wasn't working from home. You need a way to entertain yourself, and you need a way to entertain your kids as well too. Everybody loves their family, but in small spaces, unless you just live in like a LeBron James house or some giant mansion, it's still a small space for 3, 4, 5, 6, 8, 9 months to be cooped up with each other. So subscribe to Netflix, subscribe to Disney Plus, subscribe to Amazon Prime, subscribe to Hulu, whatever else is out there. So that helped Netflix a lot. Their numbers were just revenue-wise and monthly subscribers and paid memberships were just amazing, just because of the stay-at-home economy, basically. So if we go over here to Alpha Street, which is a website that has these nice graphs, from time to time they have them on certain companies. They don't have them on all of them. I think they kind of pick and choose which ones they choose to do this for. Probably more the more highlighted type companies. They'll put this graph together. So if we look right here in the middle here, you'll see membership highlights for the first time, and this is in the millions. Global streaming paid memberships for Netflix, over 200 million paid memberships. That is amazing for the first time for them. And last year, Q4 2019, they were at 167 million. Now you got to think, these are people that have decided to take either the basic plan or the high end where you can share across multiple devices, 4K streaming, stuff like that. I mean, that's like almost 38, 37 million additional people in the course of 9-10 months or so, or a year, I guess, because it's from December of 2019 to December of 2020. So the numbers are amazing, and what makes that even better is that Netflix has said that they are expecting to be cash flow positive for the first time by the end of 2021 because their paid memberships has eclipsed 200 million. So, and then on the side here you can see breakdown by regions. US, Canada up 9%, Europe, Middle East, Asia up 28%, Latin America up 19%, and then Asia Pacific up 56%. So even though growth wasn't the greatest, still almost double digits for North America, tons of growth in other regions around the world. And of course, the Asia Pacific area is huge, and Central and South America will be huge for them as well too. So they still have lots of room to run, lots of room for the stock and the company to grow as well too. And I think what adds to that is the fact that they are expected to be cash flow positive, because for years they were just bleeding money, billions of dollars, to create all this original content. So that has helped the company be profitable, and it has helped the company stock be really, really good. But me personally, I like to see positive cash flow, so if something happens, you have the money to be able to pay off your debt if need be and not have to keep refinancing that debt over and over again. So some other numbers here: total streaming revenue up 22%, $6.5 billion in US and Canada, and then international, that's the streaming side. And then another number that I thought was amazing, which I think this has helped grow their subscription base and their membership as well too, is that 62 million people in the first 28 days were watching The Queen's Gambit. I personally haven't seen the show. The Crown is another one that's really popular, and I have one or two friends that was watching The Crown. That 62 million people in the first 28 days, that's a record for one of their series. So that helped grow the subscriptions. That helped grow the membership as well too. And of course, I mentioned year over year, 24% increase, $25 billion was what the company brought in. Netflix was what they brought in for 2020. I don't know why I'm losing my train of thought, because I have my notes sitting right here, but I keep blacking out for some reason. So really quickly here, they also added 37 million paid in 2020. That's on top of the 28 million, which was in the first 9 months. So the company is a really good company. Personally, my opinion now on whether or not I'm going to invest in them, I'm going to wait and see. I'm in my mid-40s. I just started investing. My Roth IRA is my priority, which I did hit the $6,000 maximum contribution, which was a nice record for me as a first-time investor. So, and I am primarily a dividend investor. So my plan is to try and live off as much as possible my dividends once I get to that age. So I'm trying to build up my dividend portfolio, my core stocks first. Get those into the $50 and $100 a share. Right now, I have a few that are in double digits, but not enough, especially not enough of the good ones that I would like to keep adding to. Apple being one of those. I have a little over 7 shares of them. And then Procter & Gamble, I would like to build up some more too. And Verizon, I'd like to build up some more as well. So, and I do have other videos if you want to see those other, how those portfolios have performed. So that's personally my strategy, but I'm not a financial consultant or an accountant or an economist or anything like that. So I don't, you got to look at your own personal strategy. You have to do your own research and figure out how you want to go in on a company and if it fits your strategy and what your future goals and plans are. So, however, if Netflix does not do the share buyback program, which in my opinion, I wouldn't do that. I would pay down debt, or I would do a special dividend, or maybe even start a regular annual dividend or something like that instead of doing share buybacks, because all that's going to do is inflate the stock price. Maybe they could even do a stock split, like Tesla did a stock split and the stock shot up. Apple did a stock split and the stock shot up. Apple's actually went down for a little while, but then it regained itself and it's continued to go up. But Tesla's just went straight through, almost going to be at $1,000 again after they did the stock split. So maybe if they did a stock split, like a 2-for-1 stock split or something like that, I would get in, and of course I would end up buying fractional shares, because probably 90 to 95% of all of my holdings I've bought with fractional shares. So if they split it and it's at $560 or $580 and they split it in half, I would probably get in with $100 or $50 or something like that, if I have the money to do so. So that's just my personal opinion on Netflix. If you already own them, expect your price to continue to make money and continue to see the stock grow. Even if they don't do the share buybacks, I still think the stock is going to continue to grow, because they have tons of room to grow around the world, and they're still way above, even though Disney Plus is gaining ground. They're still way above Disney Plus and HBO Max, and Amazon, in my opinion, just doesn't have the greatest original content anyway. So Netflix is kind of where it's at. So in my personal opinion, for streaming content on the go. So I hope you enjoyed the video. Don't forget to subscribe and share with your family and friends, and hit the like button there. Until the next one, which I think have a video tomorrow or Thursday, mahalo and aloha, everybody.